Hello everyone and welcome to Fluent Financial's What You Should Know for the week of June 28th. My name is Mike Lanese and I'm your portfolio manager at Fluent Financial. The S&P closed the week at another record high, posting its best weekly performance since February as investors are betting that inflation will be temporary. The S&P rallied 2.7% for the week. The Dow gained 3.4%, which is its best week since mid-March, and the Nasdaq climbed 2.4%. The bond market was mostly flat, but the long end of the Treasury curve saw some selling on Friday as the core PCE inflation came in at its highest rate in nearly 30 years. The first quarter real GDP numbers were finalized at 6.4% year over year as well this past week. President Biden announced a $1.2 trillion bipartisan deal on infrastructure spending, and a few hours later stated that he will not be signing anything unless a human infrastructure bill like the American Families Plan is also passed. Three Republicans then later clarified that President Joe Biden's assurances that he isn't linking the two deals will allow negotiations to go forward. So that should be as clear as mud for everybody. Last week we saw stress tests with the banks and they passed with flying colors after the Fed announced that the biggest U.S. lenders could easily withstand a severe recession. And this means that big payouts like dividends and stock buybacks could be on their way. Travel is returning with a vengeance as TSA recorded nearly 35 million travelers so far in June, but that is causing some disruptions with the ramp up in demand. For example, American Airlines canceled about 120 flights a week ago Saturday and then another 176 flights a week ago Sunday, and said that half of those cancellations were due to unavailable flight crews. China is leading the charge against Bitcoin, which has seen more than a 50% plunge since April, as governments globally have cracked down on the currency. Over the weekend, the Financial Conduct Authority, which is the UK's financial regulator, barred Binance markets from Britain. Year to date, the S&P is up 13.97%, and our stock portfolio V&O is up 18.15%. For the week ahead, we have a three-day holiday weekend coming up with July 4th on Sunday, so we expect markets to be fairly quiet for both this week and next week. Something market makers typically say is you never want to short a dull market, and we expect to see maybe that market just floating along or maybe even floating a little higher over the next 2 weeks. Economic reports coming out. The Dallas Fed manufacturing activity report came out this morning, and it was estimated at 32.5, but it actually hit 31.1, a little lower than expectations. We also have pending home sales, the U.S. manufacturing PMI report, changes in non-farm payrolls, average hourly earnings, labor force participation rate, durable goods orders, and the weekly jobless claim numbers. Notable earnings this next week include Herman Miller, Bed Bath & Beyond, General Mills, Constellation Brands, Micron, Walgreens Boots Alliance, and CarMax. For an options update, we are 1 week through a 4-week cycle, and stock income portfolio has generated 0.92% in call income. And of that 0.92%, only 15% of the portfolio is in the money. We still have 30% dry powder that we can sell calls against in the remaining 3 weeks. The portfolio is up 2.33% in its first week of the cycle, versus the S&P being up 2.74% during that same period. But the real story is going to be with the volatility index, or the VIX. It is down. It finished Friday at 15.62, which is down 62% since a year ago May. So the lower that VIX is, the harder it is for us to generate quality cash off of selling call positions. The Advantage portfolio has generated 0.79% in call income after selling 64% of its possible calls in the first week of the cycle. Since the June 18th expiration, ADV is up 2.62%, and again, that's versus the S&P being up 2.74% over the same time period. As always, thank you for tuning in to What You Should Know, and have a great week.